Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the scenario that we were watching play out before us involving the dollar and the global economy, the Federal Reserve, none of this is going to end well. That's why I'm convinced that gold and silver prices are going to be heading much higher. We're going to get into some data in today's live stream, and I want to address some rumors also that have been floating around this community. But first, let's just take a look at the chart for the price of silver. So you can see we've been in a bit of a corrective phase here. However, you can see that this sloping line, the breakout that we've been in since really February of this year when silver started to move up, and then perhaps more significantly when it broke through the $26 level here in April, May time period, this breakout is still intact, right? And, a lot of people I think are going to say, well, let me guess, you see silver pullback, is it a buying opportunity? And yeah, it really is. I bought this dip. I just got some fresh junk silver from SD Bullion. Very happy to have that in my possession. If you want to get some, it's still incredibly cheap. One of the most undervalued assets, I think, on the planet right now, not just silver, but specifically these constitutional 90% silver coins. The fact that, holders of physical metal right now must be selling these coins because obviously, premiums are low, so people are selling these into the market. It's just stunning to me, but it's a huge opportunity. And the reason I say that is because, one, the breakout in silver is still intact. But let's say that even we see the trend line here fail. Maybe we see silver fall back down to maybe 26 bucks, something along those lines. See some similar action in gold. It will still be an even bigger buying opportunity because, look, the setup here is for massive dollar devaluation. If you want to see some evidence of that, first we can examine the U.S. debt clock, right? $34.8 trillion is pretty bad. That's a lot of debt that's going to have to be monetized by the Federal Reserve, but the pace at which this debt is accruing is absolutely exploding. Look at this. This is the monthly budget review from the Congressional Budget Office, just published yesterday for May 2024. Really don't need to get too much into this. We can just look at the estimated deficit in May, $348 billion. That's in 1 month, folks. Money that we spent that we didn't have. This is why the Treasury is having to issue record amounts of debt at the moment, because we are spending way more than we have. Now, they kind of put this caveat here in this, that the reason it was so high, $108 billion more than the amount recorded in May of 2023, is because there were some extra federal payments that were due on June 1st, which got made in May. Now, if that hadn't been the case, it would have only been $14 billion more than last year. But, those payments did have to be made, and the deficit is skyrocketing. Think of that, month over month or year over year compared to May of last year. Almost a 30% increase in the monthly deficit. It's a huge number. You think for almost 200 years, the U.S. hadn't even accumulated $1 trillion in debt. Now, in 1 month, we're racking up $348 billion. Now, if that doesn't tell you that the writing is on the wall for the purchasing power of the U.S. dollar, because, ultimately someone's got to buy all this debt. I'm going to talk about the foreign buyers here in just a moment when we address those rumors, but who's going to buy this stuff? It's going to be the Federal Reserve, right? Now, regarding foreign holders of U.S. Treasuries, this is an important rumor that has been going around. The U.S.-Saudi petrodollar pact ends after 50 years. This is a headline from tipranks.com, just some random site, but I've seen this in the comments on many of my videos recently, also all over Twitter or X, people talking about the petrodollar ending on June 9th, which was this Sunday. Now, there seems to be no confirmation of this from the Saudis, from anyone in the U.S. This is like a rumor that's been going around. It seems completely unfounded to me. Now, not saying the petrodollar isn't at risk here, but there was no official cutoff date. So I just wanted to address that because a lot of you might have been, believing this rumor going around, seeing even reputable, quasi-reputable YouTubers promulgating this rumor about the petrodollar ending on June 9th. But I'm here to tell you this is not the case. The foundation of this rumor seems to be that on June 9th, 1974, there was an article in the Wall Street Journal or the New York Times, one of those two publications regarding the original petrodollar agreement, but there's nothing in there about a 50-year timeline. There's no official cutoff, so this was just one of those things that gets picked up and shared, and people share it with no sources. But this is a actual development which occurred, which is related to the end of the petrodollar back on June 5th, that Saudi Arabia joins the Bank of International Settlements and China-led central bank digital currency project. Now, this is a real thing that is actually happening, which means that the petrodollar system, the system where the Gulf nations, not just Saudi Arabia, but all the Gulf nations, price their oil in dollars, which, as far as I know, they're still doing, although it's being chipped away at, right? You got to understand that the petrodollar is not some formal agreement. It's sort of a de facto status quo thing where they price all of their oil in dollars. It leads to a lot of demand for dollars around the world, because if you want to buy oil from one of these major oil producing nations, you need dollars to do that. So it helps prop up the dollar and the status of the dollar as the world reserve currency. But this is another cut in the sort of death by 1,000 cuts to the petrodollar system. And this is a project called M-Bridge. We've talked about this on the channel before. It's a collaboration launched in 2021 between the central banks of China, Hong Kong, Thailand, and the UAE. So China getting on board, or rather Saudi Arabia getting on board for this, very critical, because also China is the primary consumer of Saudi oil. It's also their number one trading partner. So if they're setting up a cross-border central bank digital currency project for these kinds of international payments, that means that we are one step closer to China no longer paying Saudi Arabia, the UAE, these other oil-producing nations for their oil in dollars. And that means that the dollar is going to depreciate, because a lot of these petrodollars are going to come back to the U.S. It's going to lead to high inflation. Also, a key element of this system is that the petrodollar profits of the Gulf nations get rolled over into U.S. treasuries. So it allows the U.S. to borrow a lot, because we've got these ready buyers of U.S. debt internationally, but that is coming to an end. And you might recall this, just to show you how far along we are in the undermining of the petrodollar, which isn't gone yet. It wasn't gone as of June 9th, but we're heading towards the end of this. It was back in December of last year that India made the first ever rupee payment for the purchase of crude oil from the UAE. They bought 1 million barrels of oil for digital rupees. So that was the first major non-dollar denominated, public at least, transfer of oil for a non-dollar currency. And it wasn't for gold, it wasn't for renminbi, it was actually for rupees. But you might place that as the end of the petrodollar system. It's not going to be the sort of thing that happens overnight, right? It's going, people saying contract ended yesterday in the chat. No, I'm telling you, there was no official petrodollar contract that expired. There are no sources to confirm that. It's just hearsay. It's just conjecture. People believe anything with no source, no citation. No, there was no contract that ended yesterday. This has been a system that's been in place for 50 plus years, and it's been on its way out for a while, right? We've been watching this erode slowly over time. There is still a petrodollar. They are still taking dollars for payment for oil in Saudi Arabia. At least for some of their oil at this point. But this is something that is going to change in the future. So the important thing to note here is that had it ended on Sunday, we would have seen major repercussions for that, right? And that hasn't manifested itself. That's still in the future. That's not even priced in yet. So, that's going to mean much higher prices for oil, for gold, for silver, for commodities priced in dollars. Let's see. This is also a key element of what is coming, right? China sells record sum of U.S. debt amid signs of diversification. This is very important for the price of gold. This was in quarter one of this year. China sold a record amount of U.S. treasuries. Now, what does that have to do with the price of gold? Well, the current correction that we're in the midst of, the big smackdown that we saw in gold and silver on Friday. Silver was down over 7%, gold was down a couple percentage points. This was a part of the jobs report, that was part of it, but the other part of that 1-2 punch, and I think the bigger part, was this report that China stopped buying gold in May. The headline here on Business Insider is gold is getting so expensive that even China's central bank stopped buying. So yeah, gold hit a record all-time high in May. They reported that they didn't buy any gold in May. That's China's central bank, at least officially. I mean, they probably still bought some gold, right? They don't always report everything they buy, but this caused a huge downturn in the precious metals. Now, I think you might say rather than they stopped buying, perhaps they paused buying. And, it's interesting. They're probably buying right now because of the correction in gold that was triggered by this announcement. But this is very important to know because China is sitting on a huge pile of U.S. treasuries. I mean, you can see the most recent data here from the Treasury is from March on this chart. But back in March of 2023, China had $869 billion worth of U.S. treasuries. Now they're down to 767, and they just dumped a record amount in Q1. So, they're dumping all of these treasuries. They're diversifying. What do you think they're getting into? I mean, they're buying up gold, obviously. They're buying up gold, probably silver, too. Certainly, industrial users of silver are gobbling the stuff up in China. They're installing huge amounts of solar capacity in China right now. They need tons of silver for that. So they're buying lots of silver. You can see silver down today. Again, $29. I mean, this is a huge steal, I think. The fact that it's down a little bit today, down another 2%, it is a buying opportunity. And look, it could fall further, right? I mean, silver is a very volatile market. Markets don't always behave rationally. It could fall down to maybe the $26 level. I don't see it falling any further than that. There's no guarantee it's going to drop that far again. Look at the chart here. It looks like silver is about to actually perhaps drop down to maybe the 28.50 level. That would be about the lowest in this flag here that's forming. And then I think we're off to, new highs again. The silver rally is still intact. And it's certainly intact in China. Look at the Shanghai Gold Exchange. You've got the most recent data from there. The closing price for June 11th, that's today, the PM benchmark price for silver on the Shanghai Gold Exchange, 7,670 yuan. If we do the math on that, that's about $1,058.27. That's per kilo, of course. So you've got to divide that by 32.15 to get yourself a troy ounce price, but that would be $32.91. So in China, silver is still trading well over $30. I think it's only a short matter of time before it begins trading similarly in the U.S. once again, in U.S. Western markets. And again, there might be a slight pullback before then. I'm not trying to time these markets perfectly. I'm continuing to dollar cost average. But look, when silver is in the red like it is today, that's the kind of day I like to stack. I mean, it was just up over $32. Now we're back down to 29. If you were looking at silver over $32 and you were kicking yourself and saying, man, I wish I had stacked when it was cheaper, well, here's your chance. This is a buying opportunity. And sometimes, I'll see people in the chat ridicule me and say, oh, you're a broken record. Silver's always a buying opportunity when it drops. Well, look, not always, but in this scenario, yes. Yes, in the scenario we are currently in, where they're borrowing $348 billion in 1 month, where China is gobbling up precious metals, where they've taken a little break here, and it sent the markets into this, really a massive overreaction to the downside. Yeah, it is a buying opportunity, especially when you consider how low premiums are right now. I mean, look at this. $219 for $10 face value of junk silver. Those premiums, they're not going to last. I mean, you remember what happened back in March of 2023. The premiums on junk silver soared, on all physical bullion soared. Junk silver, you couldn't even get it. And, junk silver really is kind of like the canary in the coal mine, because it's such a limited supply that when, people start pouring into physical metal, it's the first thing to dry up. But that is not what is happening right now. Stackers are actually selling their metal. That is a huge opportunity for those of us who have the conviction that the dollar is in a lot of trouble. I mean, when we just are looking at the obvious signs here that continued devaluation is on the way, that the Fed is going to have to, whether they cut rates now, whether they cut rates later, if they wait and they cut rates later, it just means that they're going to have to be even more stimulative, because the crisis is going to be that much worse. You can't hike rates and keep them elevated when you are accelerating your deficit spending. But that's exactly what the central bank and the federal government are doing right now. And that means that ultimately crisis that we witness is going to be that much worse. Where it'll manifest itself, I don't know. Will it be in the sovereign debt market? Will China decide to dump a bunch of treasuries all at once? Certainly there's a possibility of that. We're not exactly on the best terms with them right now. Will it be because the regional banking system can't handle the higher rates? That's a possibility. The FDIC just revealed to us recently that the regional banks are sitting on $500 billion plus of unrealized losses, largely due to residential mortgages, the rates of which have risen significantly, meaning the existing mortgages on the banks' books have declined precipitously in value. Well, because of the treasuries that they're sitting on, that's what triggered the crisis last year. I mean, I don't know. Again, I don't have a crystal ball. I don't know where the cracks are going to show first, what's going to break, but I know that the whole system is getting incredibly rickety. They're playing with fire here. Inflation is already very elevated. The Federal Reserve, they're, constantly doing damage control on the dollar. It seems like they're constantly trying to slam down the price of precious metals. This is the sort of thing that can only persist for so long. Silver has already broken out. It's still up significantly year to date, and the fact that we've gotten this pullback is a real gift. Silver is on sale. That's it. So, look, I'm going to keep stacking. I'm going to buy this dip. Let me know what you think in the comments down below. Stay safe and happy stacking, everybody.